Thank you, Mr. Chairman.
Thank you very much. I now yield 5 minutes to the gentleman from Vermont, Mr. Welch, Congressman Welch.
Thank you very much, Mr. Chairman. Thank you, Mr. Paulson. Mr. Paulson, I was on that call, I think September, October, when you informed Congress, you and Mr. Bernanke, of the dire condition in the financial markets. And my understanding of what your goals were in Mr. Bernanke at that time were to do basically three things. One, stabilize the financial system. Number two, eventually reform the system. And number three, repay the taxpayer. Is that more or less a fair assessment,
Yes.
summary?
Yep.
I want to go to this, and I share that concern about repaying the taxpayer. When the deal with Bank of America went through, the federal government, and you were very much a part of this, did two things to help in a stability effort. One was the TARP payment of $20 billion, and number two was the asset backing of these mortgage-backed securities of $118 billion, correct?
Yep.
And the intention was that the taxpayer get repaid on that $20 billion TARP payment. Some firms have repaid, Goldman Sachs, J.P. Morgan. And there was going to be an 8% interest rate paid to the taxpayer on preferred stock, correct?
Well, yes, on the second round is 8%.
And then there was a $118 billion backing by the U.S. government in a non-recourse loan that provided assurance to the Bank of America shareholders and to the owners of these securities that the federal government would make good on them in the event that there was a collapse, correct?
Yes. Mm-hmm.
And my understanding is that it was the intention of the Treasury Department that the taxpayers be compensated for providing this guarantee, correct?
Yes. Mm-hmm.
And that guarantee was going to be, as I understand it, in the form of a fee of about $4 billion, correct?
Yeah, I've forgotten the precise number, but that sounds about right.
That sounds about right. And that fee would be arrived at in the ordinary course of what was the customary fee for such a guarantee program, correct?
Yes.
Mr. Lewis is now, and you understood as in your capacity as Treasury Secretary, that in fact the American taxpayer was on the hook to backstop those loans if they went sour, correct?
Well, I clearly understood that we had a term sheet and that the deal wasn't finalized yet, but we were, and then I left office before it was finalized.
I understand that, but a deal's a deal, and you shake hands, and that's all you need. And that's, frankly, I think that's the way most Americans would be,
Okay.
right?
I would say on this one, I know where you're leading. I just I don't have the details because
I'm not asking the details.
I'm not sure why
you
it
as
didn't.
the Treasury Secretary of the United States government, the person filling the shoes of Alexander Hamilton, would agree that when you give your word, you're going to keep your word.
I would expect we would keep the word, but...
And I think you would, and I give you credit for that. My question is this. Mr. Lewis apparently is now saying that there was no deal. He didn't sign it. Even though he benefited by it, he doesn't want to pay back the American taxpayer for the benefit that the Treasury and the U.S. taxpayer provided. Is that the right thing for Mr. Lewis to do?
Well, I don't know what the circumstances are. So I don't know why.
I think there's a lot of things you did well, and I understand you were trying to stabilize the situation. But this, frankly, I think is a simple yes or no. We being the Treasury Department, the U.S. taxpayers, $118 billion of our money at risk. Bank of America took a great advantage of that because that provided stability and confidence. And now Mr. Lewis says he doesn't have to pay for it because somebody forgot to have the term sheet signed. Is that acceptable to you?
Well, can I just explain why I'm hedging on this? Because I was part of doing a similar deal for Citigroup. And we had a term sheet, and then it was very difficult to get it done. And Citigroup wanted to get it done at least as much as the U.S. government, and it was hard to get it done. So what I don't know, if the circumstance was as you presented it, okay, then there'd be one answer. But I do not know why, because I wasn't there. All I know is we had a term sheet. I left government and the deal didn't close.
Well, I mean, here's the bottom line on that, and this is one of the frustrations. A lot of us voted for that program
Right.
because we felt it was the lesser of evils. We didn't want to. And I remember you on the phone call.
Yeah.
You actually were quite candid in saying the last thing in the world you wanted to do was come to the American taxpayer and ask
Right.
for this bailout, but it was your honest judgment that if we didn't do it, there would be a calamity that would ripple across all of America.
Right.
So you went ahead. We did the same thing, in effect, with Bank of America. Now Mr. Lewis wants the benefit from the taxpayer commitment, the Treasury commitment, and he doesn't want to pay. Most Americans think a deal's a deal, and they should pay.
I would say that if it was a deal, I would think he should pay. And no one was tougher than I was in trying to protect the American taxpayer. And and no one is looking at these programs more with hindsight more than I am in wanting the taxpayer to get the money back.
Well, see, this isn't
So,
hindsight. I mean, this is like a deal with a wink. You know, the taxpayer made a handshake, we're going to cover it, and Mr. Lewis kind of had a wink or had his fingers crossed.
I don't want to take the other side of your argument. I'm just simply being honest and saying I do not know why the deal didn't get done.
Well, I'm sure you can
And
appreciate.
the deal could not get done for three reasons. It could not get done because it was so complex people couldn't figure out how to get it done. It could not get done because he wanted out, or it could not get done because the government wanted out. And I don't know the answer.
Okay.
Gentleman's time is expired.
All right. Thank you very much. Thank you,
Right.
Mr. Paulson.
I now yield time to the